Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Tuesday, the 16th of February. Starting off with Afritin, where there's been a nice breakout here. We managed to break through both the initial February peak, which was around the 4.25 pence area or so, and heading towards the top of a rising, in fact 4.4 pence, top of a rising trend channel from the autumn of 2018, heading as high as 7.5 pence, and that could be seen as soon as the end of the next month, and upside valid while we hold above 4.4. On to the stock of the moment, but arguably the stock of the year to date, and it is Argo Blockchain. Looks like it's heading for the FTSE 100, maybe in the June reshuffle. We might get it there. But at the moment, we've broken the top of the trend channel, previously drawn up to 210 pence. And while we're above that, looking for further upside, 400 pence seems a long way away, or it seemed a long way away yesterday, but not quite so silly today. So 400 pence the target as soon as the end of next month, while we hold above £2.10. And the other point to note is that this is the second gap to the upside that we've had, so there could be a final exhaustion gap, maybe towards £3, etc., over the next few days. So looking pretty hot there. It reminds me quite a lot of the rise of Novocyte, that particular situation at Argo. Onto a situation which was the Argo of last year, arguably, Avacta, where we've had a decent gap through the resistance area. That last peak in January at £1.58. And at least while there's no end-of-day close back below today's existing low at £1.68, we're looking for a bit more on the upside. I think before I was looking for £2, £2.10 to retest the post-summer 2020 resistance, and that's still the case. Top of the November channel there, up to £2.10. If you are a fan of the stock, and I know there are quite a few people who are very inspired by the situation here, the best case scenario target probably at the moment is a line of resistance from the end of December, currently pointing as high as £3. But at the moment, above £1.68 up to £2.10 looks to be a fair assumption on Avacta. Stock which doesn't get too much airplay here, but I thought I'd update it on the occasion of some decent news from the company, and also the way that the shares have hit what looked to be a rather ambitious target there, just above the £4 level at the top of a rising trend channel from the end of 2019. That trend line currently running around the £4.10 level, and if there is an end of day or a weekly close above £4.10, we could see the shares up towards the top of that rising September trend channel from last year, as high as £5.40 by the end of next month. I think there's some deal done today reported at £4.50, so that premium deal could drag the shares higher of Audio Boom. A stock which was regularly insulted until very recently was Clear Leisure, but current situation is that we've got this decent consolidation just below the £1.2 pence level, so above 1.15 pence on an end-of-day close, looking for a fresh leg to the upside. Good that this week we've seen support come in above previous February resistance, so that's good. And while there's no end-of-day close back below 1.15, looking towards the top of the rising trend channel from the end of December as high as 2.2 or 2.3 pence by the end of next month. Stock which is a slightly amusing name to some, Cloud Cocoa. Here we've got a nice gap through resistance for the shares. It'll be interesting to see whether the shares can hold that resistance. 1.4 pence, the end-of-day close target, end-of-day close we're looking for to deliver further upside. If we can get that early, for the rest of this week or on a weekly close basis, then that big target here on a 1 to 2 month time frame, maybe 2 to 3 month time frame, is 2.8 pence for Cloud Cocoa at the top of a broadening triangle from the end of 2019. So above 1.4, we could see further significant upside. This stage only really back below the 50-day line at 1.16, really delaying the upside scenario. Stock which was covered a few days ago, I believe, here, after quite an absence, was Jangada. And good to see some traction here for the stock. think the highlight here was really the key reversal up, probably at the end of last week, and then retesting obviously the resistance of last month at 7.7 pence. We've gapped higher today, which is pretty impressive, well, very impressive in fact, and approaching the 14 pence top of June price channel target that we were looking for before. If you're a fan of the stock and looking for it to trade higher, we've got an October resistance line projection target as high as 22 pence, which could be hit as soon as the end of next month. All the while, we need to hold above the high of yesterday and the floor of today's gap at 8.25 pence. So above 8.25, looking for 22 on Jangada. Kibo worth looking at the moment, just because it took so long for the shares to break out. A painful experience, and I think probably today is the first day we've seen two solid candles above the 0.4 level, probably the first time since this time last year that we've seen that. So it does look as though Kibo is finally on its way. The message has got through to the bulls, and decent weekly close above the initial February resistance at around the 0.42 level. Weekly close above that, and we could be heading up towards the top of a broadening triangle from March last year as high as 0.75 pence, perhaps as soon as the end of next month. So basically above the 0.4 area up to 0.75 for Kibo looks to be on the cards now, and really, given how long it's taken to base out, we should be expecting much more, especially we've also in fact got a golden cross buy signal between the 50 and 200 day moving averages as well. So everything going on there at Kibo in a positive way finally. Next stock is one that I think I looked at last week or the week before, and it's made good progress within this rising trend channel from basically the end of last year, from December obviously. Initial target here up to 4.1 pence, while we hold above the initial February resistance at 2.86. And if we can break through 4.1, we're looking for, as we were before, a 5.75 pence target, which is the upper parallel of the January trend channel. So let's see if that rather creative charting pans out for my health checked. Stock which took even longer than Kibo to break out, but looks like it's finally on its way as well, is Oracle Power. Here we've actually, it's unbelievable, broken through the 200-day moving average, broken through a falling wedge at 0.6 as well after 3 months of trying, so that's pretty impressive. And the view is that while if we can get a decent end-of-day close and a weekly close above the 200-day line at 0.66, the target here after the log jam break could be as high as a July resistance line projection, the top of a broadening triangle from last summer as high as 1.25 pence. Obviously that's retesting, or coincidentally that's retesting the June peak, and hopefully the shares can finally do that after a long period of consolidation for those shares. Rather easier situation here at Online Blockchain with the break above that late January peak at 57 pence, and the longer we stay above that, the greater the chance of a move towards the top of a rising trend channel from the end of June last year as high as £1.20. In fact, I would say that's probably the minimum that we're looking at the moment. Can really see the shares hitting that resistance line projection from the beginning of November up to £1.60 as soon as the end of next month. But £1.20 by the end of next month seems to be a fair target while we hold above 58 pence.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.